Hi friends, welcome back to another video. So this is just an English version of the video we just released before in Tamil. So in that video we explained about what is the difference between traditional 401k and ROTH IRA. We are going to talk about the same topic in English in this video. So let's say when you are talking about the retirement account, right? So many people we are not thinking about the retirement when we are working. So after 50s or 60s, we might be thinking like, we should have done this retirement planning in our 20s or 30s itself. So as long as you plan for your retirement, so it will be more benefit for you in future. Once you came to US, so that time you might have heard of all these benefits from your company, like traditional 401k, ROTH IRA, HSA, which means health savings account. So all those benefits, right? We don't have any idea on what it's all about. So people might be taking more time to enroll for this benefit because they haven't even explored those benefits in India when they came back to US from other countries, right? So now in this video, I'm going to explain in very simple manner about what is the difference between traditional 401k and ROTH IRA. So there is another benefit account which is called HSA, right? So that HSA account benefits, I will create a separate video because the HSA has more benefit, which is like a combined benefit of ROTH IRA and traditional 401k. So I'll do in separate video. So now let's see what is the difference between traditional 401k and ROTH IRA in this video. So before going to the video, so please like this video. There is a one thumbs up symbol in this video, right? Just click on it. I'm not selling any courses here. I'm just giving like a free education about the financial in this channel. So just give me thumbs up and then it will be more helpful for me to grow this channel. So first we are going to see about ROTH IRA. So ROTH IRA is nothing but you're going to invest your post-tax amount into this account. Okay, since it is post-tax amount, it has a lot of benefits, when you withdraw at the age of 15 and off. So after that age, when you withdraw this amount, you'll be like, completely tax-free and penalty-free. Okay, so after 15 and off, when you decide to withdraw this amount or when you decide to get some income from this amount, so that time it's completely tax free. And second benefit of this account, if you see, when you withdraw your contribution, let's say you're contributing $1,000 into this account and you're getting profit like 100 or 200 from your contribution, so there is no penalty or tax when you withdraw your actual contribution into that account. So when you withdraw your profit, that time you have to pay some penalty, but when you withdraw your contribution, actual amount that you invested, there is no penalty or taxes in the ROTH IRA. If you see the third benefit of this account, when you are in lower tax bracket, right? Let's say you are having like a less than 10% of tax bracket, or you are earning very less amount as a salary, so this account is best account for you guys. But whereas if you're getting more packages or if you are in a highest tax bracket state, you have to pick some other account like 401k. But ROTH IRA, we have some contribution limit. We are going to see this in detail. So let's talk about the drawbacks of this account, right? The first drawback, like I said, the ROTH IRA has some limits. So every year you can contribute up to 6,000 for the year, right? So you can contribute this 6,000 as a single payment or single transfer to your ROTH IRA and then invest the whole amount at a one single time. Otherwise, you can split this amount into multiple installment and then invest periodically into your ROTH IRA. That is the first drawback with ROTH IRA. And second drawback, if you see, this is not like a tax write-off account, right? So you cannot use this investment to show the tax benefit. So let's say when you're investing the $6,000, this is completely post-tax amount. So you're not going to get any tax benefit out of it. And the next drawback, when you see, when you're getting, let's say you're getting some profit, right, out of your contribution. So when you withdraw that profit, you have to pay the penalty for that profit amount alone. So you're not going to pay any penalty or tax, like I said, for your contribution. Whereas let's say you're investing some amount in Robinhood or Webull, right? So when you withdraw that amount, the profit amount, you're not going to pay any penalty for that amount. Whereas in ROTH IRA, you have to pay the penalty for your profit in your account. Is that clear? Okay, so if you see the next drawback of this account is, so let's say you have like highest tax bracket, or you're earning more as a salary, right? So this is not the best account to invest, because you're not going to get any tax benefit out of it, because a lot of other investment also you can plan for that to reduce your tax. Okay, those are the drawbacks and benefit from this Roth IRA. So whereas let's see the traditional 401k. The traditional 401k has lot of benefits and also few drawbacks, right? The benefits, if you see the traditional 401k, it's completely tax write-off account. Let's say if you're earning the amount like 50,000 per year, right? So you can invest some $10,000 into 401k. That $10,000 you can show is a tax benefit. Remaining 40,000 you have to pay the tax to the IRS. Anyhow, you have to pay the tax later, but for that year you can show something like tax write-off using this account. And also the next benefit, if you see, you can contribute up to 20,500 as per 2022. This is like keep on increasing every year, like a $500. So before 2019 it was like a 19,000 around. So now they increased to $20,500 in this year. That's another benefit. Let's say if you're earning like a 100k per year, so you can invest like a 20,500 in this account to get the tax benefit. That's the major benefit of the 401k. And if you see the third benefit of this one, the employer match. This is like a huge benefit of this account. Some of the employer like they're matching like a 1%, 2%, 5%, and some of the employer can match more than that, right? So whoever like working in US, and if company is offering this benefit, please match up to the the employer match. That is the first thing you should do when you're joining for the company. So the reason is, let's say company is matching the 5% for the 401k. You're contributing like a $200 per month to the 401k as a 5%. The same $200 the company will also match for your investment in 401k. So 200 you are contributing and 200 companies contributing, so like $400 will be invested into your account 401k. So you're getting more benefit out of your investment. So because you're investing more amount, the compound interest of that amount also will grow higher than the Roth IRA, right? That is your major benefit of the 401k. If you see the next benefit of 401k, when you're earning more salary, let's say when you're earning like something like more than 70k or 100k, so you can give some amount to this 401k as an investment, and also you can get some tax benefit. And also if you are paying something like a highest taxes, so you can reduce some taxes using the 401k. That is your major benefit, right? So these are the benefits. Though it has lot of benefits, we have like some drawback as well. Let's talk about the drawback of 401k. The first major drawback is, so whenever you withdraw some amount from your account, so you have to pay the penalty plus taxes. You cannot withdraw your contribution also without penalty and taxes in 401k. So whatever the amount you're going to withdraw from this account, it's completely taxed and also with penalty. That's the first major drawback of 401k. And if you see the next drawback of 401k, you have to pay your entire tax at the age of at the retirement, or when you decide to withdraw this account, right? So after 15.5 of your age, let's say when you decide to withdraw your amount from 401k, you have to pay the regular tax at the time of withdraw the amount. So let's say when you're withdrawing the amount at the age of your 61 or 62, so you have to identify the tax. You have to calculate the tax based on the tax bracket for the particular year when you withdraw this account. Okay, so next thing is, let's say you're holding this account, and after your retirement, so at the age of your 70.5, you have to withdraw the whole amount from this account. The reason for that is the IRS, they're not collecting the taxes till your 60s, right? So after that, at some point they have to collect the taxes. So the rule here is after 17 and a half, you have to completely close the account to pay the tax to the IRS, right? That is the drawback for the 401k. And if you see the next drawback of the 401k, so let's say when you are paying the taxes when you withdraw the account later, right? So that time you will never know what is the tax bracket during that time, right? So let's say now you are paying like a 20%, 30% taxes, so you cannot predict what is the tax amount will be when you withdraw this account. So that is another drawback. So now let's see what is my opinion and which is best, which is not best, right? So if you ask my opinion, right, all three accounts like a traditional 401k, Roth IRA, HSA, all has lot of benefits, right? So when you decide to invest something, just max out all these three first, then go for your another investment, like opening your individual brokerage account, or investing in crypto or in real estate, all those other investment. So if you wanted to invest, just max out all these benefits first, then go for another investment. So each has like different benefits, so just get benefit out of all these accounts. So when you retire, so something is going to help bigger than nothing. So this is all about the difference between the traditional and 401k. Like I said, the HSA will be in different video. So until then, please share this video to your friends and subscribe this channel, and see you next video. Take care. Bye.